Hello, everyone. Joe Vitale, American Retirement Advisors, with the Gradient Investments Weekly Talking Points for September 17th, 2021. Let's talk about stocks. Equities were down across most of the major indices another week as the inflation report suggested downward pressure on stock valuations. The S&P was down 0.54%, the Nasdaq declined 0.46%, and the Russell 2000 added 0.45%. Now, overseas, the international developed markets, which is the EFA, that declined 1.38, while the emerging markets was dropped by 2.19. By size, U.S. small caps outperformed mid and large cap stocks. Energy was the best performing sector, while materials and utilities were the poorest across the sectors. A little bit about fixed income. Interest rates rose while bond values declined following the inflation report, which suggested that the Fed Reserve would announce tapering plans at its November meeting. Recently, we just had a meeting about that yesterday. They're going to talk more about that in our next week. We'll talk about what happened yesterday when the Feds talked a little bit, when Powell talked about the interest rates. So the benchmark 10-year Treasury rate rose 2 basis points to close the week at 1.37%. Now, commodities, gold, which is a precious metals at an endowment holding, declined 2.17% last week as the U.S. dollar strengthened. The price of gold is likely to be volatile in the run-up in the next week's Federal Reserve meeting, which was this week. Depending, and it hasn't changed a whole lot. We've been keeping an eye on it. It's still 17.30 right now. As the U.S. dollar had indication that the Fed's plan to taper its bond purchasers, they really haven't said much. They said that right now, as of yesterday, it's still looking all right. They're not increasing rates too much, but they say what's happening right now, they're still optimistic. We'll see what happens in the next couple months. Inflation rose 0.3% in August on a month-over-month basis, a notch below the consensus expectations of 0.4%, but the inflation on a year-over-year basis was still 5.3%. Airline fares, which was the primary driver of lower than anticipated inflation, dropped 9.1% month-over-month. Meanwhile, core inflation, which is excluding volatile food and energy, rose just 0.1% last month and is up 4% over the last year. Now, retail sales increased 0.7% in August versus consensus estimates of a 0.7% drop. So that's good for the market, right? Sales growth was led by online retailers. Strength was even better than excluding the sale of vehicles, which were still in short supply due to the semiconductor shortage, which we're still wondering why they can't make them here, but they say it takes all this time to run up and everything, and it takes months. But I still think we need to start making things more locally so we don't have to wait for this. Also, the decline in the sales for July was revised down 0.7%. Initial jobless claims for unemployment rose by 20,000 for the week of September 11th, which doesn't make any sense either. Higher than estimated as new claims rose sharply in Louisiana, reflecting heavy damage from Hurricane Ida. Continuing claims, however, fell to 2.67 million for the week ended September 4th, the lowest since mid-March of last year, and I think we're going to see that lower now that they're stopping the stimulus and the extra unemployment. We should hopefully see that come way down. People need to get back to work because there's so many job openings right now. Let's talk about company news. Microsoft, which is a core select in the G33 holding, raised its dividend by 10%, consistent with the increases of the past 5 years. The board also approved a new share repurchase program authorizing up to $60 billion worth of shares. Yield on the new rate is 0.82%. Thermo Fisher Scientific, which is a core select holding, announced its financial guidance for 2022 ahead of consensus expectations before its investor meeting. Back in July, management also raised its 2021 guidance and shares rose 4.34% for the week. That is it for this week. Thank you so much for being a part of our ARA family. We're very thankful to have you. God bless you. And of course, if you have any questions, feel free to give us a call at 855-756-5700 or visit us online at aradvisorsinc.com. See you next week.